Hi, I'm Tammer Fakhry, broker and owner of Elite Mortgage.
Hi, my name is Mickayla Fatovic, and I am the broker owner of Elite Class Property Management and Real Estate Company.
So we were catching up the other day about real estate and the questions that you've been getting from your clients who are looking to buy. And I figured it's a good opportunity for us to talk to people about it on one of our videos. So what were you getting questions on?
So my clients always want to know about credit, okay? And credit is a very weird, strange, and complex subject, as me and you both know. So they wanted to know really just kind of like the ins and outs on the basics of the credit scores and how to qualify.
So let's talk about credit scores real quick, because I think that's the fast and easy part of it, right? So there's 3 credit bureaus, right? Experian, Equifax, and TransUnion. They all put together credit scores for you based on a lot of different factors, which we'll talk about. And based on that, there comes out a FICO score. And your FICO score is, each one has their own individual FICO score, interestingly enough.
Not just this, they have multiple different FICO scores.
And I was just going to say that. And there are FICO scores for buying a house versus a FICO score for buying a car versus a FICO score for like opening a credit card or a line of credit of some sort. So it's clearly a very easy thing to understand.
No, it's not.
It's not. But interestingly enough, one of the things I always like to let people know, for example, because a lot of people go use, like, say, Credit Karma, right? And that's what they use to monitor their credit scores. And I tell them that's great. You can get a directional idea of what's happening with your credit score, right? Is it going up? Is it going down? But what you have to understand is, just because Credit Karma says that you're a 750 doesn't mean that you're going to be a 750 for buying a house, because Credit Karma is geared towards 2 different types of buyers. One, if you're trying to buy a car, or 2, if you're trying to get a credit card. So it is not designed to follow the models of FICO scores for a mortgage. Very different thing. So that's one thing that's very important to know. Other thing that's important to know is that I said each one of them has their own FICO score. So when banks look at you to decide to get a view a mortgage or not, what they actually do is they look at the middle credit score, right? Because they all have their own formulas. They all have their own way of calculating it. So you'll have 3 different scores: a high, a medium, and a low. Banks are going to actually look at your mid score to decide that's your credit score that they're going to use.
Yep. They use 5, 4, and 2 usually.
Yes.
Either that, 8 or 9. 8 and 9 come in like second and third, but 5, 4, and 2 is like the typical scoring modules used across the board for mortgages anyways. Now, the best way to like find out your score before applying to a mortgage, I would have to say, is by using like My FICO, right?
Correct.
Or you could just apply. It's not going to hurt to apply. If you get denied, at least you didn't qualify.
If there are 2 people borrowing on a mortgage, or 3 people, which happens, you have to know that they're going to take the lowest of the middle scores of all the people that are applying. So that's very important to know. So you having somebody who has an excellent credit score, but the other person has a credit score, they're going to take the credit score into consideration, because, and people ask why all the time, because if something happens to the person with the great credit score, like they pass away, or say they're a married couple, there's an instance of divorce or whatever, they have to ensure that the person who is the lower credit score would still be able to qualify and continue to carry the mortgage on their own, and that they're not too much of a credit risk. So that's important to know.
Let's say, what's the minimum scores for each type of financing?
Right now, let's talk about the 2 big ones, which is conventional and FHA. Conventional, generally speaking, and I say generally because there are the occasional banks and lenders out there that will lend below this threshold. But for a conventional loan, you need a credit score of 620. And I say need because if you want to work with a reputable lender, then you need a credit score of 620. Nobody that's reputable was going to lend to somebody who's below a 620. There are other types of lenders who are kind of shady. They will charge ridiculous amounts of interest. They will probably charge you ridiculous amounts of points, and they are probably really truly closer to more like a hard money lender than a true lending institution that will give you a loan on a conventional.
Yep.
For FHA, there are reputable lenders that will lend as low as 580, and that's as of the time of this recording, right? So that always changes. It's not hard and fast rule, but there are very reputable lenders out there that will go down to as low as a 580 credit score to give you an FHA loan. But again, understanding the lower, just because you qualify at say a 590, you're not going to get the same rate as someone who may be a 720 that's getting an FHA loan. So yes, you'll qualify, but it's going to cost you a lot more money.
Plug away, sir.
All right, let's pivot on to things that impact your credit score. Very important, right?
Ooh.
One, not paying your bills on time is the number one issue that will cause your credit score to drop. There is a leeway, right? So, oh, shoot, I forgot to pay my bill. It was due 3 days ago. You go in, you pay it, you're fine. It's once you hit that 30-day late mark that all of a sudden now it becomes a negative on your credit score. So it's not like, oh, it's due on the 1st, I paid on the 3rd, and my credit score is going to get impacted negatively. No, there's still an understanding because, you know, believe it or not, a lot of people still like to mail in their payments as opposed to doing things online. Fine, no problem, no judgments. We're judging you. But there is a leeway as far as that's concerned. Another big thing that impacts your credit score, which a lot of people do not realize, is utilization of your credit. So someone could say, hey, I have 3 credit cards and each one's giving me $10,000 in credit, and I use 9,000 of each of those cards, but I pay it off religiously at the end of the month, no problem. No, it's a problem. Credit companies and the credit scoring companies want to see that you are not just paying on time, but that you use your credit responsibly. So what does that mean? They want to see that you are utilizing your credit, but less than 30% of your overall credit limits that are available to you. So meaning, I have 3 credit cards, each one gives me $10,000. That means I have $30,000 total of available credit for me. I should not be using more than $10,000 across all 3 together. So you could use 10,000 on one and 0 on the other ones, you're fine. You want to use, whatever it is, the math is, right, 3,000, 3,000, 3,000 across each one, you're fine. But what you cannot do is max them out or go above that threshold and pay it on time and still think you're going to be okay. You're not.
Well, you can think that. But
you can. Your credit score is going to be somewhere in like the mid to upper 600s. You're not going to get into that 700 range, which is where you start to really save money because of the fact that you actually use your credit responsibly.
Yep.
So very important to know. Another big thing, negative impact on your credit score, is closing lines of credit or paying things off that were bought on credit, i.e. a car loan.
What do you mean?
What do I mean? Great. So let's say you went out and you bought a car, it was $30,000 or $35,000 car, and you financed 30,000 of that, right? And then you still have all your credit cards that we talked about, 30,000 in total credit available to you. The way that the credit bureaus report this is that they see that you have a total combined available credit of 60,000. They took your credit cards and added them up, and they saw the loan for the car, and they see, okay, that's 30,000. So 30 plus 30 is you have a total available line of $60,000 in credit. So a lot of times people will say, oh, I'm about to buy a house. I want to get rid of this payment that I have to make, this $450 payment. So I'm going to go pay it off. And once you do that and you pay off your car, for example, because you only have, say, 7,000 or 8,000 left on it, what happens is that 30,000 available credit to you that was part of your car loan goes away. And so now, yes.
Sorry.
Yep.
You learn something new every day, people.
You learn something new every day. So now all of a sudden you don't have 60,000 of credit available. You only have 30,000 of credit available.
Yes. This is very true. It's all, and also with like closing credit cards too. Like try not to close the credit
Yes.
card right before you're going to buy a house. Try to keep them as active as possible, because you can also end up losing your credit lines if you're not active on them. Like creditors will randomly just close your account out without warning too. It's very nice. I've had it happen a couple times.
Yeah, no, you got to be careful with that. They usually send you warnings, like you haven't been actively
Oh,
using your
but
credit.
I'm obviously just super unactive to the extent of I don't even get them.
Yeah, yeah, exactly. Yeah, no, but that's true. That same thing for available credit lines, right? So a credit card that's available to you, or a home equity line of credit, for example, right? If you have one of those, and this is obviously for people who are like investors, right? Like if you have your primary house, you're trying to buy another house, secondary house, summer house, whatever it is, right? Vacation home, you letting that line of credit expire is not a good thing, right? Having that open line of credit on your home equity line of credit actually keeps you having a larger available credit, and especially if you're not using it, that's a great thing for you. So yeah, you got to be mindful of those things. A lot of hits against your credit is a negative thing, right? People are constantly running credit checks against you. It generally sends a red flag. Now, there are exceptions, right? If say you're shopping for a house or you're shopping for a car and you go to multiple lenders, right? And you have multiple people run your credit for you because you're trying to shop around for the best rate, and you don't have to, you just come to Elite Mortgage, we give you the best rate. But I'm saying if you're shopping around for the best rate, if you have a big burst of credit pulls in a very short period of time, usually a 10-day window, there's no real impact on your credit score. But if it's like once a month or twice a month or 3 times a month, someone's hitting you to see your credit score and pull your credit reports, that's going to start bringing down your score a lot, because all of a sudden it's not you're shopping for something and shopping around. It looks like you're trying to open multiple lines of credit in a very short period of time.
I said, now you're sketchy.
Right. I mean, you could have always been sketchy, but now you're officially
Now
sketchy
you're
on paper.
super sketchy.
Exactly.
Stop
Right.
being so sketch, man.
Don't be so sketchy.
To get the creditors or the collection agencies that you have on your credit to completely remove themselves is super hard to do. It's not as like heard of, but like, for example, me and you were working on a mortgage, and they actually ended up sending a letter to us, and they're like, hey, here's a collection that you had that's like from ages ago. If you pay X amount, we'll actually delete it. And they put this in the letter. And I'm like, oh, okay, this is great. And that will actually also boost your score, because now that collection that's already on your account just drops off. But you have to actually make sure that they follow through. That's the only thing.
You do. You do have to make sure that they are actually following through, and you might have to pay to pull a credit report, and it's worth it, right? So it's freecreditreport.gov, I believe.
Yeah.
You're entitled to one free one. Yeah, we'll put the link down there. You're entitled to one free one every calendar year. So it's not going to give you your scores, but it will give you your actual credit report, and you could see things that are where your lates are, where you're on time, if you have derogatory accounts that are in collections, all these different things. You get the free one once, but now you can continue to order it, right, throughout the year. So you will pay for it, but if you're trying to work on getting a mortgage, it's worth the cost to say, you know what, this company reached out to me. They said they will delete this completely from my file. You pay it off, you come to an agreement, you pay it off. You need to give them 30 days, from when the payment's received, to make sure it comes off your credit report, because credit agencies report and they update every 30 days, their reports. So it's not 30 days from when you did it. If you just missed the cutoff, they did it the day before everything cleared. It's going to take another 30 days to process. So you want to make sure you give yourself maybe 30 to 45 days before you request another report. And you pulling your own credit report has no impact on your scores whatsoever. Yeah. Very important to know. But yeah, I always tell clients who come to me and they need help qualifying for a mortgage because their credit's too low, I give them this advice. I say to them, go reach out to those creditors and get from them in writing that if you pay in full on an amount that you guys come to an agreement on, that they will remove it from your credit report. But make sure that the fact that they will remove it from the credit report is included in the agreement.
Yes, this is very important because I have actually dealt with creditors myself where they say that they're going to do something and they don't.
They don't.
And they're notorious for doing that.
Yes.
So very important to always try to get like a letter or some type of like, something in writing, especially just showing that, like the fact that we got that offer letter and it literally says it directly right in the offer. Like that's huge. A lot of times they don't even really do that anymore. I haven't seen it done in like ages.
Yeah. And how long does something stay on your credit report if it's derogatory? 7 years.
Yeah.
7
Yeah.
years.
And it doesn't, here's another fun fact about that. It can actually renew too. It's not supposed to, but like if it gets transferred over to a new collection agency, they can renew it. And it's
Correct.
really messed up because it's supposed to be like the 7 year and then it's supposed to go, but nope, that's not the case. Little fun
Because
fact
because the new creditor is now reporting it all over again. So the clock
7 years
starts all over again. Yep.
Yeah. Even though it's not.
You know what? Sometimes with those issues, and you can go in circles and circles around it, and with the credit agencies and all this other stuff, sometimes it is worth the expense of hiring one of these professional companies that deal with these problems. They're going to be pricey, but it's worth it if it means it's going to clean up your credit because you need to make that next move in your life, and something like this is stopping you from doing it. I, funny enough, had a credit issue years ago, and it was a judgment that was never really a judgment. So it was a judgment and it was incorrectly being reported against my name. And I was trying to get it removed from the credit bureaus, and I got 2 of them to agree to remove it. The third one, and I can't remember which one it was because again, this is so long ago, refused. They're like, well, we'll do an investigation and we'll let you know our results. So the first 2 removed it, no problem, really quickly, easy peasy. The third one went back to the court where it was supposedly, I had this judgment, and they had like, the court has this massively long number, right? With like 6 leading zeros and then the actual case number. Well, when it was originally reported, I caught it, it didn't have the leading zeros. It just had the case number. When I opened the dispute to get it resolved, they investigated it and they found it with all the leading zeros. So then I had 2 judgments, not 1, even though it was the same judgment.
What?
They're like, oh, it's a different number. So yeah. So I finally ended up calling one of these companies, and they were able to get it off for me, and it cost me a couple $1,000s, but it was worth it.
Damn.
Yep.
Oh my God.
Yeah. Let's talk about getting your credit improved. And this is by far, and there are a lot of rumors out there that I keep hearing about. If someone has a good line, a trade line that they're already working on, they have a credit card, add you as an authorized user, and then all of a sudden your credit score will jump up. This doesn't happen.
Yes, dude. Okay.
Does not happen.
I thought this was real. And I'm like, Eric has had this card that he's always paid on time. Like this one card from like 2010, right? I'm like, okay, I'm going to jump onto his line of credit and my credit's going to go skyrocketing and I'm going to be able to do everything I want. Yeah, that didn't happen. It literally hit my credit and it actually took off like 5 points. I was like, what the fuck is this? Yeah, that's a myth.
Now, the best way to do it and the fastest way to do it, and I'm not saying it's going to be like in 2 months, but in 5 months or so, go open a secured credit card.
Yes.
With the bank. And don't go to them and say, I don't want a debit card. I want a secured credit card, right? So they're going to take money from you. Let's say you're going to open it for $1,000 and they're going to give you a credit card, and you're going to get a statement every month like you would from a regular credit card company. And again, let's go back to number 1 on the list. Pay it on time and pay it in full. And if you say you're going to get a credit card that's about $1,000 or $1,000, use less than 30% of it. Meaning
so
what?
Less
than $333 a month should be used. You did math. You did math. Mickayla, by the way, can't do math. For anybody who doesn't know, she cannot do math. Like 2 times 4 is 20 for her. So yeah, it's amazing. But yes, use it less than $333 a month, pay it in full. I always tell people, make it your card that you get gas with, right? You'll probably spend the $300 a month nowadays. Use it for your gas card and then pay it in full every month.
Okay,
and
I'm sorry, I have to cut you off.
No,
But
you always cut me off. Go ahead.
I
Whatever.
know, I have to though. But okay, listen, my credit was really, really bad. Like it was like 400s at one point because of blizzards and shit. And I didn't have insurance. I was really stupid. I was young, whatever. Okay. I didn't really care about credit back then. And I have built my credit to where it is now. It's not like perfect or anything, but it's getting up there. I'm pretty proud of it. Over 100 and something points. But I used like Self. Self is a secured credit card. They do great.
Yes.
Hear me out. They do great because they do the what was it? It's like an installment line, and then they do it into a credit card, and you can keep doing that over and over and over again. I think they like made it so you can, after your account is at the maximum installment, you can redo it again, and then you can just keep adding that to your line of credit. So now all of a sudden your credit line is just like growing and growing and growing and growing with each installment plan that you're doing, which is like $25 a month. And after, 2 years, it's great. Yeah.
No, I thought you were talking about something else. It's not called Self. I can't remember what it's called. But yes, that's an option. Going to, like I said, any bank, and almost every bank in the country has the option to do a secured credit card. So use that option, pay your bill on time, use that utilization low. That is the fastest way I found for people to raise their credit scores, quite honestly. Yeah. Beats anything else and everything else. So all the other gimmicks that people talk about, all this other stuff, it doesn't really work. That's the easiest and fastest way to get your credit score raised quickly. I will warn, there is another way, and I caveat this with, as a broker, mortgage broker, I am not a fan of this. There is a company where you can they will report your utilities and your cell phone that you are paying on time. What's the name? Do you know the name of the company off the top of my head?
I don't know the name of it because there's like a few of them out there nowadays. Yeah. But like, for example, my property management software, I didn't even know it was doing this, but it was actually reporting my tenant's rent to the credit bureau. So I had no fucking clue. They're like, oh yeah, we were building our credit. And then of course I switched the software. They're like, you suck. Like, okay, sorry. I didn't even know, sir.
Well, it's interesting because, again, the rent is not a bad thing, because that is actually a guideline change that's happened recently. But people are using the utilities, and we can have a whole episode about the guideline changes later for that. But the utilities, they'll report that you're paying your utilities on time, you pay your cell phone on time, and that's great, except for the time, and it helps build your credit score, except when it's time to get the mortgage. Those outstanding balances get caught up in your debt to income ratio, and will start to limit how much you can pay in a mortgage that the banks feel is a safe amount. So it's a double-edged sword. It's great to raise credit. It's not great when it's time to actually buy the house.
So maybe like close those out before
you start looking for a home.
Like way before, not like a month.
Way before,
like
not the month before, like months. Yeah, 6 months to a year before.
Okay.
So and that's basically credit in a nutshell.
That really is.
That's it. And pay your bills on time, fix your credit if you're having problems, get those derogatories off.
Don't money launder.
That's a totally different topic, and we were not going to talk about that publicly. If there's any questions about anything that we didn't cover or answer, ask below in the comments and we'll get back to you.
Contact us via the description below. All of our contact information is there. Feel free to check both me and Tammer out on social media, on our websites, explore, interact, send us emails, call us. You might get to interact with my very fun receptionist that Tammer really loves. But yeah, that is really it.
Catch up with you guys soon.